Hello friends, thanks for joining me again. A little bit of time today to make a video. I chose this chart. It's a chart that I've been following pretty closely for a while now. There is strength in the background. There's an accumulation of some sort in the background. And you can see price has been trending higher for quite a period of time. Now, on this chart you can see that price gaps quite a bit. There are a number of gaps on the chart. When I make my own charts using Microsoft Excel, I fill in the gap with a hollow part of the bar, so you can still see the gap, but it makes the chart much more clear. So in doing that, I made that same chart and filled in the gaps. You can see here the hollow proportion of the bar is the gap, but you can see much more clearly the price action. So you can see that price has been trending higher generally, trends higher. There's a little period of consolidation, trends higher. This, if you're wondering, was an announcement day. That's a whipsaw. That's price went up initially, then came down, and then finished back pretty close to the middle. That quite often happens on announcement day. That was a 6-month announcement, 6-month report. But this whole period, if you remove that bit there, this whole period is, to me, some form of bullish absorption. And you see price broke out here. Now, here's the first interesting bar. That's this bar here. Very high volume, and price has accelerated higher. So price made that much gain on that much volume. Next bar shows a test. This proportion of the bar was a test below the previous close, and it's just popped out the top a little bit to close as an up bar on the day. This is a daily chart. And the next bar had even higher volume than this volume, just slightly higher, but even higher, but it's only made this much ground. You would expect on even higher volume that it would make even more ground than this bar did, but it didn't. And that's because supply was being drawn out. Supply generally comes in 3 forms. It's profit taking from people who have bought at a lower level. It's from stale supply from the left, people locked into an old position who are holding on for break even to get out and not make a loss, or from short selling. And there is short selling in this stock at the moment, but it's mostly to moderate the price movement for accumulation purposes, or at least in my opinion it is. So for me that was profit taking mostly. So when supply is drawn out, the market will generally come back and try to remove that supply before continuing higher, because if the market is trying to mark the price higher, if it has to absorb supply being drawn out, it wants to absorb that supply for the cheapest possible price, not pay the most expensive price unless there's some urgency in getting it higher, which usually there isn't. So price comes back, and you can see initially there was a test for supply, and that's just a weird looking bar. Now this is an almost perfect, an almost textbook perfect shakeout. You can see that volume did increase, so supply was drawn out. That would have been catching traders' stops, people who had their stop too close, or threatening anyone who was thinking about selling. As price goes down, they're feeling as though they're going to miss out on these higher prices up here, so they are encouraged to sell. That's threatening the sellers in the market to come out and do their selling. So it's removing supply is what it's doing. And in response, price moves higher. So effectively, this is a consolidation zone. This is where price consolidates after accelerating higher. Remember that whenever price moves substantially higher over a relatively short period of time, it'll draw out supply. Generally from one of those three areas I mentioned earlier: profit taking, stale supply from the left, or from short sales. So price has responded positively to the shakeout, and then there's an attempt to test here. Another one of these strange bars, which I think is part of the market wanting to do one thing, which is move higher, and part of the market wanting to do another thing, which is to come back and test further. So you get this bar, that sort of 50-50 bar, half and half. The market unsure on how it's going to move. Generally the larger players will get what they want in the end. So now you've got a test of the shakeout. Prices come back and tested within the body of the shakeout. So that's a test of the shakeout and a positive response from it. And you will note, I'll just clear some of this off. You will note, here's the shakeout. Here's the highs of the range. Here's the test of the shakeout. Down here, the shakeout drew out that much supply, but the test of the shakeout drew out reduced supply. So you can see that some of the supply has been removed in this zone. Price responds positively to the test of the shakeout. Now you've got another test for supply, and down here you'll see that supply was very low. Selling pressure has reduced to very low levels. Price pushes up to the highs of the trading range. In response to that very low volume, there's no sellers in the market. The smallest amount of buying pushes price higher. You can see it went up to the highs of the range. A final test for supply and absorption of any supply at that level, and it's drawn out this much supply, way below the current average. The average is this little line, this gold coloured line. And then price accelerates away, accelerates higher on modest volume. Have a look at the volume here compared to how much was being drawn out when price really tried to accelerate higher. Probably about half, a fraction above half, and prices pushed higher and looked strong. The bar closed tall and proud. It stands up there. Now you'll probably find that the market will test for supply, and if all's clear, accelerate higher again in the coming days. And you'll find that this type of thing happens all the time in a market. Price breaks out above a level, it draws out supply, it goes through a period of consolidation. There's certain tactics used to remove the supply and check that it is lower than previously, and when supply is very low, price prepares to move higher in response. Markets will generally not rise very high when increased supply is being drawn out. It just makes it difficult to carry price higher when there's supply being drawn out. There's always going to be some supply, but supply needs to be modest or minor. When supply is getting a bit too heavy, markets will generally come back, move into a consolidation zone and attempt to remove that supply. This is also a good indication that active traders are involved in the market. This is less likely to be passive professional traders. This is much more likely to be the work of active professional traders, and they're often the ones you want to follow on the coattails of, because they will attempt to move price higher. Okay, hopefully that was worthwhile watching. Thanks for your time again. See ya.